Good morning, ladies and gentlemen, and welcome to the CROMA Security Solutions Group PLC final results investor presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged. They can be submitted at any time via the Q&A tab that's just situated on the right-hand corner of your screen. Please just simply type in your questions and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company can review all questions submitted today and will publish those responses where it is appropriate to do so. Before we begin, as usual, we would just like to submit the following poll, and if you could give that your kind attention, I'm sure the company would be most grateful. I would now like to hand you over to the executive management team from CROMA Security Solutions Group. Roberto, good morning, sir.
Good morning, Jake, and thank you very much for your introduction. Welcome all of those that have managed to attend today for the CROMA final results for the 12 months to the 30th of June 2024. My name's Roberto Fiorentino. I'm the CEO of CROMA Security Solutions Group PLC, and today I'm with...
My name is Teodora Andreeva, and I'm the Chief Financial Officer of the group.
So I'd like to start today, if I may, to talk about the opportunity. Last year, end of June, we disposed of Vigilant, the guarding business, which is what has provided us with the cash to pursue the opportunity ahead as we see it. So what is the market opportunity? Well, today we know that there are approximately 6,500 locksmiths across the country. It's safe to say that the majority of those are one-man operators from a van, but there are quite a large number that have operated from individual stores in secondary and primary, sometimes, locations in high streets. Those businesses tend to be small locksmiths, perhaps family-run, with just a handful of people serving a local community. They've built up a reputation in that local community and are respected, but they are small operators and they find it difficult to deal on a national basis at all, and only service opportunities that they can manage within their local market. So we've seen this for a long time. We see CROMA, the CROMA model as we call it, which is already proven as an acquirer of these individual small locksmiths stores. And when we acquire those locksmith stores, we broaden their offering into the market by giving them access to other products that we run from our stores, and of course the cross-pollination into our electronic security services that they currently don't perform. So the opportunity today is to soak up what is out there at the moment, small businesses, by pulling them into the CROMA group and providing all the consolidation effects thereof. So that is the market today. I'd like to move on to some highlights for last year, which was the first trading year after the sale of Vigilant, or disposal of Vigilant. And it was more of a settling down year. Nevertheless, this is what we did. We acquired 2 more locksmith businesses in Peterborough and Worthing, and that brings our network of stores to 16, albeit heavily in the south of the UK, but we are spreading our wings. We have a strong pipeline for future acquisitions. That is something that Teo and I are working on tirelessly, and we'll talk more about those later. During the year, we also had some key new business wins, including healthcare sector and, again, the leisure, I should say, cinema businesses. And we've successfully supplied and delivered big security systems in that sector. We've also added some new technologies to the product range. We've added a product called Ajax, or the pronunciation to be precise is Ajax. And they are now Europe's #1 leading intruder alarm technology, and CROMA have seen huge success with that this year as we've substituted that product for previous older technologies. In addition to that, we've introduced BeSafe. Be Safe is a personal panic attack button that can be carried by anyone, and I see that playing a huge role in the future when I talk about something again later on known as Martin's Law. The other product, of course, is iLock. That's been with us for a couple of years now, and that's developing nicely. For the uninitiated, iLock is a mechanical lock, but it takes power from a mobile phone to release it using a virtual key embedded in the phone. That is a big part of the future of locksmithing, I have no doubt. So we remain focused on developing this national security brand, and if we look at the highlights of the financials, we can see that we've had a very good performance for the year. If not, one might refer to it as steady, but Teo will talk about that later. In terms of the group today, it's headquartered in Southampton. We've got 90 employees. I like the 50 years plus, it's probably getting nearer to 60 years in business. And the 16 centres are located there on the right, and you can see the heavy population of white dots in the south coast, although we have managed to get to Bury, North Manchester, and Warrington, South Manchester. The new additions being Peterborough at the bottom of that list, and Worthing. We often get asked the question, where are you going to open next? It's a great question, but the answer's really straightforward. The location is driven by opportunity and what we believe is a good business to acquire. We cannot define when they will turn up and how they will turn up. We do extensive research to find these businesses, and when we find a fit, it will be in the location in which we find it. So, moving on to the growth strategy, very simply, we've got 6.5 million from the proceeds. We are, of course, generating our own cash at the same time because our business is profitable, and we plan to reinvest all of that into growing this business and this acquisition-led rollout, as we've put it, of the group's security centre network. Now, when we acquire these modestly valued businesses, these locksmiths, stores, we are converting them into security centres. Now, we don't mean that overnight they suddenly become a security centre. We work with them, we train them, we teach them to refer clients to us in our electronics business, our fire and security, where the need arises. And of course, they have a lot of trusted clients where we can provide service. In doing so, by embedding our technologies in terms of our own IP software and our support in accounts, in IT, in marketing, all of the areas that those small businesses currently have to do in-house, it releases them and a lot of EBITDA margin so that we can obtain this uplift in EBITDA on their business. We are continuing to aim to complete 3 to 5 acquisitions per annum. I don't like concentrating on those as specific numbers because what size are they? It may be that we achieve 2 very large ones. It may be that we achieve 5 small ones. But so far, we are targeting to be somewhere between 3 and 5 for this year. Of course, the acquisition and conversion model which we've established previously and have the data to support our claims is that we're targeting a return of investment of 15% when typically those businesses their margins are much lower as they operate them today. So let's have a look at the store transformation model. These are trusted businesses in their local community that are family owned. We've got a line here saying operating 1 to 3 stores. I have to say that almost all of them are single stores. There's the odd one that might have 2, perhaps 3, very, very limited. In those businesses, they have a product range that serves their local community. And rather like all businesses, there are so many products in the locksmithing world, no single locksmith can be a master of all of them. But across our current 16 branches, we have almost every single one of those products. That means that a new acquisition in a new area that currently doesn't have access to certain products, overnight they have access to them through our other branches. The other important part about those businesses is that they have no easy exit strategy, which is what makes them attractive, or makes CROMA attractive to them and them attractive to us. We've talked about their low operating margin and their limited buying power, because their typical store revenues could be anywhere between 0.2 and 1 million. Of course, there are examples below and way beyond the 1 million across the market. So what is the CROMA effect? Well, we're talking about double-digit EBITDA margin once we've carried out the changes that are necessary to the administration of those businesses. We've got central purchasing powers with rebates systems in place, and that's how we get to this ROI of 15%. And once they are group-owned, they're part of a national network. They've got what I've already mentioned, the extended product range, and of course, fire and security, which they didn't previously have. They have their local business, but now they can start servicing national customers, which we have already, and it means we can start putting business towards them rather than having to travel to where they're located. And of course, I've already mentioned the centralized group services. I think a good example of how this has worked well just this year, albeit with the 2 small acquisitions that we made in January the 2nd, we bought those businesses for net asset value only. Now, those deals are going to come up, and they will come up again at those levels. However, we've got a target set of anywhere between 1 and 3 times EBITDA that we believe is effective for buying these businesses, where we can make a difference and get our return on investment. Another question we get asked is, why don't we just set up new shops? Why don't we just find a location we want and open a new shop? And it's a great question, but the answer lies in the fact that when you open a new shop, you don't have the existing client base that has been built up in these family-owned local businesses, where they have reoccurring revenue coming in from their systems. And again, I will talk a little bit more about that. But briefly, if I may, I'm going to hand over to Teo Andreeva, and she is going to just quickly run through the financial review, 2 pages here. Thank you, Teo.
Thanks, Roberto. I'm pleased with our performance for 2024, a good set of results. At the revenue line, revenue grew by 9%, 6% of which is on like-for-like basis. The remaining was from the 2 additions in January 24. Gross margin held broadly. There was a slight dip in GP. This was due to adjusted stock provision policy. These are the typical margins we see in the security and locksmith businesses, which is around 4 times the margins we used to see in guarding. EBITDA performed well, up 12% on last year. Earnings per share, 3.95 pence. If you compare to last year, there are 2 things that affected the earnings per share. We have done a share buyback of 400,000 shares in August 2023, and also last year at 1.11 pence, we had excessive deal costs for the disposal of the Vigilant business. Dividend, no surprise there. We are retaining our progressive dividend policy, so the proposed dividend is 2.3 pence per share. Cash, no change there. However, in the first week of July, we've received 1.7 million from Vigilant, followed by another 430,000 in September, as scheduled. To date, out of the 6.5 million total consideration, we have collected 3.6 million, and we've got another 2.9 million to collect over the next seven quarters. On the next slide is just a divisional review. It breaks down these figures in locksmiths and security. As you can see, it's a nice, steady and equal spread, 9% increase at the revenue line for locksmiths and security. At the EBITDA level, locksmiths is behind. You can see only 3% up, but we have invested heavily in people just to support the network and the expansion to come. EBITDA margins 19-20% for both businesses.
Thank you, Teo. So if we can move on to drill down into our locksmiths division. And currently we, under the heading here, presence, we operate from the group's 16 security centres. All of those are predominantly locksmith businesses. The customer base for those locksmiths is has a high recurring revenue because we're dealing with clients in the local community where they have supplied master key services. And master key systems could be going into hospitals, commercial premises, schools. So across all of those local communities, the business, all of those 16 businesses look after those types of clients. Now, in addition to that, we have FM companies that don't now just use a single store, they use multiple stores. They come to us to pick up components that they need to carry out essential repairs, whether that's for social housing, whether it's for larger businesses. And they come to CROMA because we carry this extensive range of products. And I should say, it's a pretty full complement compared to almost all other national trade services where they are forced to have to order components, and our clients can come in and pick up those parts on the same day and carry out the necessary repairs. In addition to that, of course, schools, I've mentioned already, play a big part, as does the leisure industry, leisure sector that we support. The revenue drivers for locksmiths, pretty clear. Locks, whilst old-fashioned, they're not going anywhere anytime soon. It's going to take decades before we see locks disappear. There will always be some kind of physical security mounted on a door, whether it's controlled over the internet electronically, a physical presence is required. And that's going to require ongoing replacements and upgrades. Another factor, of course, is the growing crime levels, which, of course, gives safety concerns for many. So people are being a little more concerned about their safety, buying a new house, changing the locks, having registered key systems installed. And a third factor worth mentioning is, of course, growth in housing just provides more properties that require protection, all the way through from our locks and into the next slide in a minute when we talk about security. The other factor, or final factor for revenue drivers, innovation through technology. I mentioned iLock earlier, which is this wonderful device that is mechanical, but sucks energy through the NFC chip from the mobile phone to wake the lock up. It has no batteries, no wires, but the phone powers it with a virtual key embedded in it. It then releases the door. We've already extended that into more than 1,200 student accommodation units, and we're in discussions with many more and see this as a big future part of the business. I think this final fourth bullet here, natural bridge into fire and security, this is a really important point. We're buying locksmith businesses at very modest prices, and locks, safes and keys, these aren't exact science numbers, but typically 20% would be what a corporation would spend on locks and keys and safes. Yet they spend almost 80% of their security budget on fire and security. And that's the natural bridge into fire and security. So when we look at our fire and security business, it's currently located with engineers in Southampton, and we have another branch in Bury in Greater Manchester. And those are the hubs where we currently have engineers. There are plans moving forwards to consider locating engineers closer to other branches to service system installations in those areas. Currently, we travel or work with subcontractors to support in that market. Talked about this already, but let's run through it. Sector focus: health, leisure and entertainment, schools, utilities, government and MOD. Of course, we look after the general public as well in their homes, and a lot of high net worth clients in their private residences. Revenue drivers, really important here for life safety systems, is compliance with private and corporate regulations. There are a number of regulations that so many in our industry don't understand, and those regulations are driving change for fire escape doors, the mechanisms that are fitted to them, and we are really experts in that field and understand that. Very few companies do. Innovation through technology, really important. We've always been innovation driven, using technology and finding better solutions for our clients that truly address the issues that they face and mitigate losses in the event of crime. Of course, growing crime levels, same as it is for locksmiths, remain a concern and is a driver. In terms of one point of government legislation, it's not yet fully passed. It's called Martin's Law. I mentioned it briefly earlier. Martin's Law is a document that is in final stages of approval, highly likely to be progressed very soon. And it's all about how we keep members of the public safe. And in any public venue where there is more than 100 people likely to gather, then this law applies, or will apply, I should say. This also applies in schools, and we see this as a massive market because, again, there are so few trained people that have even read the government legislation to understand it. But Martin's Law is named after Martin, who lost his life in the Manchester bombing, and as a result of that, we've started, or the government has started, an initiative to look at how we can lock down buildings and make them more safe and mitigate losses. And those of you that have followed my LinkedIn will have seen a post about the future of our children, running lockdown drills in schools. This will become a part of the future. So I think outlook in summary, well, trading in the current year has begun well, with good progress in the education, utilities and health and leisure sectors. We're currently sitting with no borrowings. We've got cash of 4.4 with a further 2.9 to come from the Vigilant sale, and of course any cash that we generate. We have a strong pipeline of store acquisitions right now, and we expect, as I mentioned earlier, to be hitting somewhere between the 3 and the 5 for this year. And we're well placed to drive sales and margin growth in the year. Net asset per share sitting at £1.12, and really this is underpinned by a strong asset base. I'm very, very happy and pleased at the strength that I see, albeit in this currently small business that I hope to expand. I think signing off, what I'd really like to say is I've been in a family business for 43 years. This business has been running for almost 6 decades. And whilst I've had a dream and thought about it in years ago, I should say, about one day having a chain of stores that never really materialized, I think now more than ever, I see this as a reality. And I'm really excited about this opportunity. I think I will sign off with that, and thank you very much. I'm going to hand back to Jake, if I may, please. Thank you.
Perfect, Roberto, Teo, that's great. And thank you very much indeed for your presentation this morning. Ladies and gentlemen, please do continue to submit your questions just by using the Q&A tab that's situated on the right-hand corner of your screen. But just while the team take a few moments just to review those questions that were submitted already, I'd just like to remind you that a recording of this presentation, along with a copy of the slides and the published Q&A, can all be accessed via your investor dashboard. Guys, as you can see there, we have received a number of questions throughout your presentation this morning, and thank you to all of those on the call for taking the time to submit their questions. But Teo, Roberto, at this point, if I may just hand back to you just to read out those questions and give your responses where it's appropriate to do so. And if I pick up from you at the end, that would be great. Thank you.
Thank you, Jake. Thank you very much once more. I'm struggling to see those questions, but I think I've got the top one now. So would you consider not buying the property that the locksmith is using if it meant you could roll out the network quicker? Again, a really good question. I think the answer to that question is quite complicated. Firstly, we're not keen on rented properties when we're sitting on cash in order to buy them. We've got a cash pile to use. Buying them gives us stability. We don't have unexpected dilapidation costs and various other things. But there's one very important factor. When we buy a business that's been trading for 40, 50 years in its local community, it is a pillar of that community, it's known to that community, and we don't want the risk of having to be shifted or moved on. We've made that mistake before by moving a shop, only to find that we lose half the client base. So having the stability of buying the premises, it can't happen in all cases because some of them will be rented and we'll have no choice but to take them on as they are. We will continue buying them for that very reason. We are conscious that we're tying up funds in property and we're not a property developer, but I do know that we are saving our pennies by doing so. And should we be called upon for cash in the future in our rollout, then we already have an undertaking with our bankers that we can borrow at very sensible rates, 90% of the total value of our properties. So before we even come to the market or anyone else for money at higher rates, we already have a step in position to take this money from our bank to continue our acquisitions. Now, in terms of quicker, I think that we've got to build steadily and solidly. We don't have room to make mistakes. I don't think we can rush out and just start buying everything that we see out there. We are very cautious buyers of those businesses. We need to see that they are survivable and that they're going to add value. Otherwise, we will have a hiccup in what we're doing. That said and done, as we are growing, we're adding more people to our team and more capability. I have no doubt that there will at some point come an acceleration. And if that acceleration requires us to borrow money, then we will do so. And I'm not going to say no to changing our policy on buying those properties in the future because it may become a necessity. I hope that answers that question on buying property. Moving on to the next question, what is the maximum number of branches you think your current infrastructure can support? The current infrastructure, we've already been investing in it, and I think we can still go some with our current infrastructure, but it goes without saying we will be taking on people at some point in time to assist us with the ongoing takeover of these businesses. One of the areas that we're finding the ability to do this is that some of the businesses that we're buying, the principals want to stay. And these are seasoned businessmen that have run a business, have a great understanding, and they also have the capacity to perhaps support by way of becoming an area manager in certain locations, and that's part of our plan. So moving on to the next question, what would be your response to the offer of significant funds to speed up the rollout from an outside investor? Would you be prepared to be diluted? If so, down to what level? We see no need right now to dilute our investors in this business when we have the cash that we are already banked. We've got more cash coming. We've got the ability to borrow more. And of course, as we're building these acquisitions, we're adding cash every year by way of remaining profitable in what we're doing. I think that as we grow, we will be generating cash and our demands on it will be very, very small. But let's not say, again, never, because circumstances can change. Maybe it's something in years to come we will revisit. I don't think we will be faster by having more money because we've got to find these businesses. We do rigorous assessments of them to make sure they're going to fit in well. And develop and be a great part of this CROMA organisation. So there is a natural pace at which we can move, but I don't deny it could be sped up at some point in the future. Now, the next question says, there seems to be a growing pattern in the group's locksmith acquisitions that companies bought with their real estate included are being purchased at notably more attractive multiples than those without. In my opinion, as a result of the real... Can I see the rest of the question, please? That's a big question, and I'm struggling to read it. Real estate included being purchased, notably it's too small there. In my opinion, a result of the real estate value being the priority to recoup from the current owners. With that being said, investing in real estate is not an efficient way to generate high returns on capital. Given this fact, will the group take the most logical approach of selling the real estate locksmiths once acquired, enter into lease agreements and use the sale proceeds to fund further acquisitions? Given the high street rent has also fallen on average around 30% since 2018, this seems like a no-brainer to unlock tied up capital. I think, again, a good point, and a good point well made, but I've already answered that in my previous, and should that become a necessity, we will do as I've said. Do we have any more questions? Assuming you are the only acquirer of locksmithing businesses of this size, what factors deter you from aiming for higher returns on acquisitions? I wouldn't like to say we're the only acquirer of locksmith businesses. It appears that way at this moment in time, and I think I know the answer why. That is because there are no really large locksmith businesses in the UK today. And most businesses in the locksmithing world are very, very small businesses, as we've mentioned, between 200 and 1 million turnover. So that's probably why there's so few of them, so few acquirers or people interested in buying them up. It's only through us buying them and adding our layers of intelligence, experience over the years, and our own IP software, where we're turning them into far more efficient businesses and improving on the margins. Clearly, once the group is established as a solid and trusted brand across the UK over the coming years, then we will have a far greater level of control through innovations. We're already seeing manufacturers coming to us before they go to anyone else to talk about their ideas of releasing new products and putting us in pole position. So higher returns on acquisitions. Of course, we all want higher returns, and we're all working to the same aim. So yes, we would like to look to achieving that. What have I missed? Number 5. What has been the biggest challenge when it comes to integrating new locksmiths into the group? Have you been able to keep the former management teams in place for all the locksmiths? If not, how do you go about hiring new staff who understand the local locksmith market? Again, another very good question. In most cases, we've retained very, very good staff, and this all comes down to the planning stages when we're looking at an acquisition, meeting the people involved and understanding who is staying, who is going. I'm very pleased to say that almost all staff that we've acquired with these businesses have remained and been supported and developed within the new setup. There are, of course, some principals that have moved on because they were selling their business to retire. But again, when we look at the business, we're looking at who are the people behind them that are going to support that business going forwards. In terms of new staff, we've already recruited new staff into a number of the outlets where we're carrying out training, because we're very conscious that as we have an aging workforce, we have to bring new people in that are going to follow in those footsteps. I hope that answers that question. Do we have any further questions there? Could you share more insights into the advantage you have as a larger operation in terms of purchasing power? What size discounts are you able to achieve? And also, do you anticipate any improvement in these discounts or payment terms going forwards? If so, what drives this expectation? Okay, so We already have some established supply chain into our business, and we are, in almost all cases, a very important part for those manufacturers. We achieve rebates of discounts. We get discounts at the end of the year for most of our suppliers on our turnover. Those are not discounts that are available to those smaller businesses because their accounts are just too small. We also, as I mentioned earlier, have those manufacturers and suppliers coming to us in the first instance when launching new products. And we also have them driving some of their clients to us. And an example of that would be where a manufacturer, be that Acer Abloy or iLock, has an inquiry from a major corporation. They can't actually hand that order over to many local locksmiths because they don't have the manpower to deliver it. So CROMA becomes their first port of call to talk to an organisation that has the ability to carry out a contract and put legal documents in place and then perform to those for the clients, where a smaller locksmith can't do that. So that's really where we have an advantage. In terms of the discount sizes available, we're probably buying at 5% minimum better than most people in the UK on those products. It's very difficult to say that that's a rule of thumb because if you want to order 10,000 of something and you walk into a manufacturer, I'm sure they're going to do a deal on those 10,000 items. But generally speaking, our purchasing price is very good and better than the businesses we're buying. Payment terms going forwards. Well, as a business, we maintain and we still have flexibility if we want to take advantage of extending payment terms. I don't think we'd have any problem with our suppliers. We currently pay them on their due dates without fail. That is only because we are supported by cash flow and able to do so. If ever we needed to ask, I don't think we'd have any pushback from suppliers in that respect. Question 9. If you're buying for 1 to 2 times EBITDA or book value, then why is the return on investment target as low as 15%? It ought to be more like 50% plus, even ahead of the CROMA effect. I'm not sure how the mathematics was calculated for that question.
The 15% includes a property, so this is a minimum target, and recent calculations show 40+% if you exclude the property spent and only look at what we've paid for the business.
Thank you, Teo. I hope that satisfies that answer, that question rather. Question 11, given the flat gross profit despite revenue growth in the locksmith division, could you elaborate on how the adjusted inventory provision impacted margins? Are there other factors contributing to this trend? No, not at all. There was just simply a conservative adjustment of stock that we chose to make in the business that reduced the GP marginally. In terms of the profitability of the business, impacted by our investment in new people that we're bringing in through the business and preparing ourselves for what we're about to do next. Are there any further questions there? Can you give an indication of how many of your stores will be acquired with a freehold property included? Do you have yourself set a limit for such deals as it consumes lots of cash? This question has already really been answered. The opportunities that we see presented, they may come with a leased property, they may come with a freehold property, and as long as there's a freehold property and we have the cash, we will continue to buy it. When that changes because we don't have enough cash, then we will consider raising the cash through borrowing back from the bank against the property portfolio. And when that's exhausted, should it become exhausted, then we will have no option but to lease. There's no target that we've set, and we can't choose whether the locksmith business that we find being a good fit to join CROMA is residing in a lease or a freehold property. They come as they come from time to time. Is there anything you wanted to add to that?
No, I think
Any more
you answered
questions
it.
there? What's next? Just to be sure, the stated return on target on 15% is post-acquisitions, right? So you acquire at 10% plus ROIC and implement further synergies, or is 15% return on investment pre-acquisition? How long does it usually take to implement these synergies after acquisition? And is this plug and play, or what's the rest of it? Does it consume considerable resources? Oops, I can't see the question now. Theo, help me out in answering this question,
Okay.
if you don't mind. So the stated return of investment target of 15% is post-acquisition.
It is post-acquisition, and what we've actually achieved, as I said, it's over 40% post-acquisition. It's the second part, which is interesting because sometimes it takes over a year, sometimes longer on some elements to be consolidated. They've got contracts for subscriptions, and we can't overnight just eliminate that cost. But what we do early in the day is plan of when to serve notices and merge all their systems with ours. So what we see is actually it's not so fast, is it? Sometimes it actually gets worse before it gets better.
Yes.
Over 12 months, we can see the real effect of the change in integration.
Absolutely, and there is another point to take into consideration, and that is as soon as we acquire, if we've got a principal that is planning to leave after 1 year, which can be the case, we very quickly decide to bring in an apprentice to work under the remaining staff who will become the managers of that business. So we take on an additional cost. I think we can say that happened for Peterborough this year, where we retained at high cost the principal for 6 months, and of course that cost has now gone. So they're all a case-by-case basis. So the next question, have you, which one am I reading? Is it 15?
Yes.
You stated that you target 3 to 5 acquisitions per year. I also stated that I don't want us to focus on 3 to 5 because they can be, we could do 1 business acquisition in millions, or we could do 10 acquisitions of 200,000 or 300,000. What logic is behind this target? There is no logic behind the target, as just explained. The businesses, on a case-by-case basis, when they come up, if they fit the very stringent criteria to becoming a CROMA business, that's when we acquire them. Have you ever thought about accelerating the store rollout? That's exactly what we're doing. We've had 1 year of settling in with only a couple of acquisitions last year. We are now very heavily focused on driving this acquisition, and again, not sticking to the numbers of 3 to 5. They are a guide. I guess we will watch this space to see what we do this year. Have you missed question 18 out, or have we answered 18? How do admin expenses increase going forward, and reasonable percentage of revenues to assume here? How do admin expenses increase going forwards? I'm not sure what we're asking. How do admin expenses increase going forward? Administration expenses are going to increase as we go forward, but I've lost that question. And they will increase as we go forward, but of course not in a linear manner, because central services, accounts, debt collection, and invoicing that are run centrally will require additional staff, but far less than are required within those businesses. So we can soak up. So I think the answer to that question is yes, there will be some increase, but it's marginal. Question 19, are there any particular aspects of the business or recent performance that you feel haven't met your expectations? If so, could you share your approach to improving these areas internally and specific initiatives you're implementing to address them? I don't know why those keep moving, those questions. I'm losing the thread. They're shifting on the screen too quickly. It may be because we're running out of time. Jake, can you cut in? Are we running out of time here?
You guys have the room for as long as you need.
Okay, thank you. Are there any particular aspects of the business or recent performance that you feel haven't met your expectations? Yes is the answer to that. I think that the depressed market and the ongoing political situation in the UK and globally have depressed markets all around. I'm very pleased that CROMA haven't seen the impact of that depression, but I guess my expectations would have been that we might have been able to sell a bit more had things been a little more stable. We've certainly seen a slowdown at certain times, and certainly the run-up to the election, shop footfall fell. It's back to normal again. Yes, we would like always to have more. So our expectations are set pretty high. And if we miss our expectations slightly, I guess it means we're still doing okay. At least we're not planning to just flatline. Where do you see annual revenues in, say, 3 years' time? So talking about setting targets in the previous question, this just comes here. Where do I see annual revenues? I'd like to see them at over 20 million, easily. Within that time, maybe 25 million. It's very difficult, but to come up with an answer. What I can say is, what I do know is that we're actively looking at businesses to acquire, and we could certainly exceed those numbers within 3 years. But let's focus on this next year ahead as a bite-sized chunk and see what we deliver this year with acquisitions. Next question.
23. David.
Do you intend to invest, to do any investor outreach to highlight the difference between current share price and net asset value? Really well run company and appreciate your efforts. Thank you for that comment. Do you intend to do an investor outreach to highlight the difference between current share price? I guess our nomads will advise us whether we've got something to talk about there, and our financial PR will have a comment to pick up on that. So thank you for your question. We'll put it to them. Is there something we're allowed to say or can say on that? Because I think that's a very strong point. As a business sitting on AIM today, albeit fairly small and insignificant, this is about the opportunity going forwards and the fact that we have a solid net asset base underpinning this whole strategy. Next question, are the recent tax changes likely to make more business owners seeking to sell and exit in the next year or so? I would say that's, again, a very good question, because I think it does place pressure on them, because they're already working on depressed margins and struggling with all the bureaucracy and red tape. And having someone come along and that being us, as in CROMA, and put our arm around them to take away some of those headaches, I think is a real positive. And we would then soak up some of that increase in national insurance that they're going to be experiencing for staff in our consolidation. But again, those numbers are run very tightly by Teo when we do investment appraisals on each of the acquisition opportunities. Will the next generation of the family work in the business? If you're referring to my generation, 2 of them are already here. And I guess the answer to that is yes. Out of the 793k spent on capital expenditure this year, mostly properties and vehicles, do you have a breakdown of how much was maintenance and how much was due to acquisitions and growth? I don't have that number in front of me, no. But I don't think there was too much in maintenance. I suspect most of that is property asset purchase and vehicles. Of what percentage of revenues do admin increase? At what percentage of revenues do admin increase? Again, don't have a clear answer for that. We're certainly soaking up what we can at the moment and have capacity to continue for a while. At some point, we will have to introduce additional members of staff. What level of non-operational costs, those associated with mergers and acquisition and or stock market listing, what is the level of those are currently very, very high. And if you're driving at why aren't we just a private company? Yes, I'd love that, because if I was going to carry on trading as I am, it would suit me far better to be a private company. However, that's not what we are. We are driving at a vision that we see of growing into dozens, if not 100 or more stores across the country. And again, I don't wish to set a limit on that. And that's why I think sitting here on AIM is the best place today for this business. If we're going to just crawl away and carry on doing the same as we're doing today, then yes, I'd agree in a limited entity that would be the case. But that's not what we're here for. Is that all of the questions?
How long does it normally,
How long does it normally take to rebrand an acquisition as a CROMA Security Centre, and does the previous owner normally continue to run the business on a day-to-day basis? All of you have got access to our corporate website. I would encourage you to go and have a look at it, because I'm sure you can learn as much as you're learning here today from it. The answer to the question lies in the fact that we are acquiring local businesses that have a reputation in their local community. And on that basis, we retain their brand. And we slowly introduce CROMA in some of the show boards in the shops, on the paperwork that's being signed. And usually, an example, the Peterborough business is called City Locks. And their heading, and on our website, they're known as City Locks, part of the CROMA group. And we're going to continue with that philosophy for a little while yet. No doubt, at some point, CROMA will be a strong enough brand to be the single remaining name in the business. Do you have plans to expand the fire and security business, or is the primary focus the locksmiths currently? The answer to that is both. The reason why locksmiths is taking the limelight is because they are established businesses in a local community that are available at modest pricing. Adding a layer of electronic security to them then becomes a simple task. Nevertheless, we are currently engaged talking to a number of businesses, and some of those businesses reside in both sectors. So in answer to the fire and security, we absolutely plan to expand that. Any final questions, or is that the last one?
I think we've got
I missed 32. You've gone back to, what's this one?
It's just this one.
How should I think about maintenance CapEx? Can you help me how I should model if going forward? Can you give an average maintenance CapEx on store level, or provide me a reasonable percentage of revenues? How should I think about maintenance? If we're talking about
investment in machinery to run a store.
So when we buy no, there's not, because when we buy a store, typically part of the assessment is what machinery do they have, what do they need, what else can we support them with. There are occasions where, of course, we do invest in high levels of machinery, but when we acquire a business, they're already providing that service and tend to have those machines in place. Like a motor vehicle, they will need servicing and they will at some point need replacing, but that just goes into the life cycle of the CapEx. So they're all different. Every business is different. Some need more spending immediately and some later on. So there isn't a rule of thumb that I can give you to follow there. So no average maintenance CapEx on a store level. And reasonable, the point about or provide me a reasonable percentage of revenues.
Percentage of CapEx versus revenues.
Again, you can't, yeah, it's very low, yeah. Are there any other final questions? I may have missed one. Was it number 31 I missed? Is there any way of going back to 31, or is that a new page now?
It's Josh.
Okay, I think we've done all our questions. I'd like to thank you for the very smart questions we've had there today. I hope I've been able to answer them to the best of my ability, but happy to take further inquiries if the need arises. So thank you for joining us. I'm going to hand back now, if I may please, to Jake to finalise things. Thank you once more.
Perfect. Roberto, Teo, that's great. And thank you very much indeed for being so generous with your time there and addressing all of those questions that came in for investors this morning. And of course, if there are any further questions that do come through, we'll make these available to you immediately after the presentation has ended, just for you to review, to then add any additional responses, of course, where it's appropriate to do so. And we'll publish all those responses out on the platform. But Roberto, perhaps before really just looking to redirect those on the call to provide you with their feedback, which I know is particularly important to yourself and the company, if I could please just ask you for a few closing comments just to wrap up with, that'd be great.
Thank you, Jake. Well, I think the only closing comments are that I said them at the beginning, or sorry, in the summary, that I remain, and so does the team here, very excited about the opportunity ahead. There is a genuine opportunity for CROMA to develop, especially with the legislation in the market, with Martin's Law coming, and the need for specialists like us to help deliver that service across the country. And even more, the reason for us expanding and spreading our wings into new areas where we can control and deliver those services to more people. So I think in summary, and to finish off, it's a huge thank you for the support that we've had. What can I say? I think you just are smart people. Read the numbers, look at what we've done, look at the story. Have we done what we've said? I think we have. And I think we've got a lot more to add for this year. So all I can say is, as far as I'm concerned, for those of you that want to invest, get on with it, please. And thank you very much.
Thank you.
That's great. Roberto, Teo, thank you once again for updating investors this morning. Could I please ask investors not to close this session, as you'll now be automatically redirected for the opportunity to provide your feedback in order that the management team can really better understand your views and expectations. This will only take a few moments to complete, but I'm sure will be greatly valued by the company. On behalf of the management team of CROMA Security Solutions Group PLC, we would like to thank you for attending today's presentation. That now concludes today's session, so good morning to you all.
Thank you, Jake. Thank you, everyone.